Okay, so if you watch my videos, which maybe you don't, like I wouldn't blame you, you probably saw last year that every time the Fed raised rates, there was a video of me doing something like this. Something exasperated for sure, because last year I felt like they were moving rates too quickly and the market was not keeping up from my very small perspective as a mortgage originator, okay? And the good news is they finally said, yeah. So they lowered rates by a quarter yesterday, which is very exciting news for all the American consumers across the country. Now, you may be wondering, what does that mean to me? Okay, well, it means that if you have a mortgage, you should definitely be looking at if the rate you have right now is the best rate you could get. Seriously. And I have to say, this is something that we've been doing for 2 months, because for the last 2 months, there's been a lot of speculation about, will the Fed cut rates? How much is it going to be? Is it going to be a quarter? Is it going to be a half? Will they? Won't they? So the markets have been like this. Okay. And the beautiful thing about a market like that is right here is where you want to lock, because you get a great rate. So we do have a lot of people who have already refinanced into amazing rates. And I'm pretty sure that the Fed dropping rates yesterday is going to spur more of that activity. So there's a couple things you want to know, because a lot of people go, oh, refinancing is the worst. And trust me, I do a lot of refinances and I feel that way about certain types of refinances as well. However, they don't all have to be painful. So there's a couple new tools that you should know about that have been brought in within the last year to help make refinances easier on people, okay? The first and my favorite is the appraisal waiver. Yes, okay. Now, some people go, ugh, appraisal waiver, you're gonna ruin the economy. No. This isn't like 2007 where you could say you wanna buy $1 million house and they'd be like, seems fair. Like, that empty lot with trash cans on it is probably worth $1 million with no appraisal, right? This is basically looking at automated comps around where your home is located to see if the value that we put in is realistic. And if it's realistic, often it qualifies for an appraisal waiver. So what that means to you is no appraisal cost, no cleaning your house for the appraiser to come over, no baking cookies so the house smells delicious, although please bake those cookies and send them. And it just makes the whole process easier and quicker, right? We always want quicker. So that's one of the amazing things. The other thing we've had for a while, but there hasn't been this huge surge of refinancing activity, so I haven't really covered it as much. But there are so many different ways that we can electronically verify data that, depending on your circumstance, a lot of files, there's a very small amount of paperwork required, because we can verify assets, employment, history of income, all electronically. Okay, now that's not going to be on every single file, but it is on some files, and it does make the process a lot easier for you. I've had a bunch of clients recently that are like, oh my God, that was so easy. And I'm like, yeah, technology's cool, isn't it? Okay, so that's the very first thing that I think is very cool, is appraisal waivers and then electronic data verification. The second thing that I'm in love with, is VA IRRRL refinances. Now, if you're a veteran, often you're like, oh, I don't want to refinance because the paperwork is so brutal. But VA actually has a refinance program called IRRRL, which is their rate reduction program. And what's amazing about this program is there's no appraisal, there's no income documentation, there's no asset documentation, there's no pest. Basically, the VA has this program so that you can lower your interest rate and save money monthly with as little hassle as possible, because they understand that getting you into a lower payment is a good thing. That's great. If a veteran can get into a lower payment, why would we torment them with paperwork? Let's get them into that lower rate. Now, I want to give you guys a couple warnings if you are veterans, because once again, I've been doing a lot of price shopping this summer and I have been outraged. Again, when will it change? So the thing to know about VA loans is that the interest rates vary dramatically based on what lender you're talking to. Dramatically. seriously, as much as 1% for the same loan. So you could talk to lender X and they could say, oh, your rate's 3.25%, we can't wait to do your loan. And you could talk to lender Y and they could say, yeah, we want to do it, your rate's 4%. It's the same exact VA IRRRL rate reduction loan. The difference is that this lender has a lot more padding in those rates, and that's not okay. So if you're a veteran, I really want you to shop those rates. Even if you think it's something where you're gonna get the best rate no matter what, I really want you to shop it, please, okay? And if you save some money by shopping it, please email me because I love those emails. They make me very happy. The other thing to know about refinancing right now that I would be prepared for, they're not closing in 10 days, okay? So even with all the technology in the world, every single mortgage company right now has a huge volume of refinances. So I would expect your refinance to take about 30 days, okay? Now the ones with the appraisal waivers and all the data verification, yes, those are closing quicker. But overall, expect at least 30 days because the 15-day refinance is not super realistic right now. That's pretty much it. But the big thing is look, if you have a mortgage and you're wondering if you can save money, it's worth reaching out to a lender. I wouldn't just type it in online and see what rates come up. I would actually talk to a couple lenders and see what they suggest, because you may find that you can switch from a 30-year to a 20-year and your mortgage payment doesn't change because the rate's that much lower. And that's the type of stuff I've been seeing with my clients that I'm very excited about. So don't assume just because you have a 30-year, you should be looking at 30-year. Check out the 20, check out the 15. Now is a really good time to do some financial planning for your future. So I hope this has been helpful. If you have questions, as always, please reach out.